the Santa Claus rally we're already in the midst of.
I think so. But you are getting up, you're at full value. You have zero earnings growth. So the question of looking into 2020, to me, is more of looking for some places where there's some bargains. And mid and small caps, interestingly, are trading at 40% off on a price-to-book basis. And you're starting to see some signs of life there. So that may be an area.
So you're like cautious. I'm not even going to say it, but you're
cautiously
optimistic. Yeah, you're
optimistic.
sort of optimistically. You sort of think things can continue to go, but have an eye on valuation.
Particularly if there's resolution on the trade front.
You are more of a bottoms-up type guy, are you? Not small caps and Needham Growth and things like that. How's the environment for your universe?
Look, we've been having a great year so far, but what we've been doing recently is we are taking some money off the table in the winners that are hitting the 52-week highs. Some of these have just gone vertical, so not a bad place to take some money off. But we're also looking to redeploy into some names that we think could work next year. Looking at those 52-week lows or those close to that. And where's the value? Small caps are seeing money come into it, but you continue to see this growth into value rotation. You're also seeing that the recent IPOs are being sold, and they're really not that strong. But we did come through tax loss selling season last week for mutual funds, so I think some of that pressure's over. But now the hedgies and the other personal investors will be evaluating going into the end of the year, and we'll probably find some bargains there too.
When does do either of you think that there's a point where the 10-year stops being good news that it's going up and people start saying, uh-oh, 10 years going up?
I think we're a ways away from it being bad news for equities.
Because so far it's been good.
What's a ways away? Like a percent?
Yeah, like 3%, maybe even 3.5%, because historically you don't really have a headwind until you get much higher interest rates. I mean, real rates have come down, so we've had the 10 years come down well over 100 basis points, and the PCE deflator only came down 50. So we can go up another 50, 75 bips and still have real rates as low as they were a year ago.
And now that we got rid of the inversion, I mean, no one's talking about recession. Now, we were never in the camp that there would be, but the whole discussion of this R word is gone 3-4 weeks ago. And so it really is being viewed bullishly that there is growth and that we can look to probably a good next year and an election year. People want to get reelected across the board. And so I think growth can come back off of bad comps, easy comps that were set this year in the second and third quarter.
If you were just to feed all these numbers into a computer and not say when it is or where it is or what's going on, but 3.5% unemployment and low inflation and interest rates that are 2% and all these things, then they'd say, wow, that must be a pretty good stock market.
Well, there's also no
reasons that right?
There's no signs of excess, capacity issues. Capacity utilization is down.
The only thing is that we've been dumping so much money into the system with central banks. That's the one thing that people might point at that might be something. Negative interest rates.
I would love to see capital spending come back. But I think we're going to see some of that as they're transitioning out of China into other places and determining where can they operate longer term. And I think that that's occurring and is going to continue over the next few years.